that story. Shifting focus now, gold is a highly valued asset in India, holding deep cultural significance among people of the country, especially women. Gold is regarded as both precious and auspicious, symbolizing tradition while also serving as a reliable investment for Indian households. Due to these factors, gold remains in high demand across the country. The price of 1 gram of 24-carat gold has reduced since yesterday. The price of 22-carat gold has also significantly reduced since yesterday, and these rates are fluctuating daily based on international market trends, currency values and demand. In fact, let's take a closer look at the comparison between the numbers today and the other days. Remember, viewers, that we also have the US jobs report that has been released yesterday. So that plays a very important role in how gold prices actually look like today. So when you are looking at today's gold prices per gram, 24-carat gold for 21st of November, 12,440 rupees, and 20th November, which was yesterday, it looked at 12,441. So only a slight 1 rupee difference. 22-carat gold today stood at 11,404 rupees, and yesterday it was at 11,405 rupees. 18-carat gold today is at 9,333 rupees, while yesterday it was at 9,334 rupees. So like we have been telling you, gold prices have now stabilized, and these fluctuations in the daily rates are usually 1 or 2 rupees, which do not impact on a larger scale. Now when we look at comparison with last week, 24-carat gold on 14th November stood at 12,719, while today it's at 12,440 rupees. So that's a significant reduction that we are seeing since last week. 22-carat gold last week was at 11,660 rupees, and today it's at 11,404 rupees. 18-carat gold last week stood at 9,543 rupees, while today it is at 9,333 rupees, and all of this sees a slight significant reduction because gold is trying to find that appropriate price where it can stabilize itself. Now when we compare it to last month, however, we will see a larger significant difference because gold rates had shot an all-time high last month. So when we compare it to 21st October 2025, 24-carat gold per gram was 13,073, while today it is only 12,440 rupees. 22-carat gold stood at 11,985, and today it's at 11,404. 18-carat was at 9,809 rupees, while today it's at 9,333 rupees. However, viewers, when we now look at last year's prices, this comparison is going to show you how gold has performed throughout the year. So throughout the year, we will obviously see a rising trend. So last year on 21st November 2024, 24-carat gold per gram was only 7,810 rupees, and today it's at 12,440 rupees. So there you have it, a significant rise you can witness over there since last year. 22-carat gold was at 7,160 rupees last year, while today it's at 11,404. 18-carat gold last year was at 5,858, and today it's at 9,333. So clearly we can see that these gold prices have seen a significant increase since last year, and they will in fact see that increasing trend when we compare it to larger periods. However, now it's trying to stabilize and find its original price that it can stabilize at. So I am joined on the broadcast by Dr. Sharat Kohli, Senior Economist. Thank you, Dr. Kohli, for joining us. We appreciate your time. We want to understand, we have the US jobs report that was released, and since it was stronger than what people were actually expecting, now there are also expectations that the Federal Reserve rates will not be as reduced as the expectations were. Will that affect the gold prices?
Good morning, Shivani. Good morning to the viewers of NewsX. Well, just to join the dots on what you said, that if a stronger job report in the US, how does it impact the gold prices? Yes, as you rightly said, that this is indicative of the fact that this will fuel inflation. More jobs means more salaries. More salary means more people go and buy. More people go and buy means stronger prices. So with the inflation may not come down. If the inflation doesn't come down, Fed may not decide to cut the interest rates. And if Fed doesn't decide to cut the interest rates, gold prices will not rise at the speed at which one would envisage. Although the undertone of gold is still very much bullish, it's a good long-term bet because it has stabilized, at this level, $4,000 to $4,100. It's been oscillating between that for last few weeks, ever after Diwali, in fact. I think these minor corrections for investors, Shivani, as I've been saying, they really do not matter. I don't think if you've got a couple of bangles or you've got a couple of necklaces of gold lying in your locker or somewhere, you'll really be worried about whether it's $4,000 or so. I think I would request the investors to have same kind of mindset, the way any owner of a piece of jewelry would like to just keep it for wearing during occasions or whatever. You don't look at the gold prices to the ornamental value. So I think just keep it in that form, whether it's an ETF or a gold bar or a gold coin. Well, long-term investors should not be looking at daily prices. You can look at the prices from a perspective of 2 to 5 years. Intermittent fluctuations should not really bother you. Well, also, Shivani, I would like to point out here that there is a certain lobby in the US which is trying to keep the gold prices curtailed because there's a fear that dollar might become secondary, and dollar has gained. I think those artificial measures being used to prop up the dollar have somehow worked for the time being. I would say for the time being, there is very important G20 summit which is happening, which Prime Minister is attending. And mind you, US is not attending that summit. So I think the outcome of that summit or the declarations made during that summit might also impact the gold prices. Because if something on the lines of another currency or something on the lines of, defying the US sanctions comes out, then you will again find gold prices rising. So gold, as I said, gold prices, they sway on the basis of the news flow, apart from the demand and supply. So the news flow will decide. There is no base price. There is no normal. Just that you're right. They have stabilized for now. So all the panic amongst the investors has settled down, and they've started to believe that this is the new normal. This is also on the technical charts. This is also the resistance level. So it's not going below $4,000, but also called the support level. Resistance level is around $4,200 to $4,250. That's the resistance level, Shivani, for now. Good long-term bet. I'm still on. This is not an investment advice. Please consult your investment and financial advisors before you take any decisions on investment. What me and you are talking here is just a news analysis, Shivani.
Absolutely. Thank you so much, Dr. Kohli, for those valuable insights as always on that show.